Today, we're going to be speaking about a company that is a little bit different than what we usually speak about on this channel. We're going to be speaking about Teladoc Health. So these guys are in telemedicine, okay? Essentially, they're innovating the healthcare industry. On the 5-year chart, they're up over 900%. On the 6-month chart, however, we're actually down 2.6%. They are ARK Invest's 6th biggest holdings across all of their ETFs, and they bought over 500,000 shares just yesterday. And they are at a price of $187 a share right now, my friends, which actually is right around a very prominent area of support for this company. So what better time to make this video than now? What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove that fact, and today we're speaking about Teladoc Health. So I've never made a full video on these guys. I think I mentioned them probably literally 3 or 4 months ago in a stocks to watch video, you know, the ones I do every weekend, but I never ended up pulling the trigger. Back then I was really focused on getting quite a considerable amount of money into EV. I was really focused on, you know, the hyper growth companies, but now I'm very focused on diversification, and this is a company that I have been following for a considerable period of time now. So what a better time to make a video. So what do I want to speak about in today's video? Well, I mean, I want to find out, is this a good investment at current prices with a long-term outlook? That is the sole objective of today's video. We'll speak a little bit about why it's been on somewhat of a downtrend as of late, the last few days in particular. It's to do with Amazon. We'll speak about, is it a buy? Obviously, makes a lot of sense. We're going to speak briefly about their merger with Livongo because it's very important. We will go through their Q3 results, see how they have performed under market conditions this year. Towards the end of the video, we'll go through a little bit of price action, and realistically we're just going to speak about what they actually do and why it's of interest to me. You guys know on this channel I love innovation, I love growth, so why are they interesting? So right before we get into the video, my friends, can I please ask you to hit that juicy like button? This isn't the same kind of thing we normally speak about, so you know, if you want more variety on the channel, show that support, hit the like button, drop me a comment down below, let me know if you're involved in these guys, because I bet an awful lot of you are. And please, my friend, if you are indeed new around here, hit that juicy red subscribe button and join the family. We're trying to end the year off on a high note. If you're interested in joining my private Discord group where we speak stocks all day every day, you get access to my buy and sell alerts, over 40 private channels, a community of over 600 investors. Hit that first link in the description, so much value inside of there. And if you want 4 free stocks on Webull, 2 of which are valued up to $3,700, hit the second link in the description, my friends. It's that simple. Sign up to Webull, deposit $100. So let's just start it off by getting an understanding of what this company actually does. The easiest way to explain it is right here. So they give you the right care when you need it most. You can talk to a doctor, therapist, or medical expert anywhere you are by phone or video. So this isn't traditional going down to the doctor, taking an hour, 2, 3 hours out of your life to get a simple checkup because maybe you have a cold. This can be done online, my friend. So that's the first reason, obviously. A company like this would be exciting to me and a lot of other investors who chase innovation. This could literally change the way, you know, the world works in the future in regards to healthcare. So they help in regards to everyday care, you know, children and family, mental health, medical experts, wellness and prevention, everything you can kind of think of. And it's literally this simple how it works, okay? So you set up an account in minutes. They connect you with the right medical care. So, you know, whether you have a fever or you're feeling chronically ill, they say themselves, don't wait weeks for an appointment. Our doctors, therapists and specialists can help you with the flu, infections, anxiety, stress, skin conditions and provide advice on serious medical conditions. No matter what you're facing, we're available from wherever you are by phone or video or app. And guys, this isn't a gimmick, this is very real. Whether it's a prescription sent to the pharmacy of your choice, the guidance to move forward, or a review of your condition from a medical expert, we're ready to help. These are experts. This is as legitimate as it gets. You know, you go to a doctor, they check you out, they write you a prescription, you go and pick it up. Instead of having to go to the doctor, you can just see them online. You still get the exact same treatment. And what I do believe to be one of the most exciting things about this is this. Skip the trip to urgent care. Our doctors are available by phone, video or app 24/7. There is nothing worse than when you are genuinely sick and you have to sit in a waiting room for 2-3 hours. You know, all you need are those antibiotics. All you need is a prescription. All you need is that piece of paper, but you still have to wait around for hours because these hospitals are so crowded. And in times like these, the ones we live in now, a lot of people have anxiety in regards to being in a hospital because of the Roni. So they would feel much more comfortable getting their medical advice through a service such as this one that is online. It's secluded. And that will be evident when we look through their Q3 earnings and their Q4 outlook, my friends. So that's the basics of what it is. Just think of your doctor being online. And also, guys, I want to remind you, they are established. They are a very big company. They are the leading telemedicine company. And I will show you just a quick extract from the Q3 2020 results now to show that. Year over year Q3 revenue grew 109% to $288.8 million, and total visits increased 206% to 2.8 million. So that is a lot of customers, my friends. And the year over year 9-month revenue grew 79% to 710.6 million, and total visits increased 163% to 7.6 million. So you can see this isn't a startup. It's not a pre-revenue SPAC. It's not a lot of the things we speak about on this channel a lot. They're very established. However, the industry itself is not the most established in the world. Now, this was a very good first half of the year for this company in particular. You'll see, we'll go back to the very end of last year, the very end of December. We went on this run, let's say to the 4th of August, to our absolute peaks. Went up 214%, which was incredible. From there, they've been coming down. They're still down 25% from those relatively recent highs. But it's been very choppy. It's been very, very sideways. Now, this was obviously because of the Roni. You know, a lot of people bought into these guys in anticipation of more people wanting to use their services with the Roni. That became true. So there was a lot of hype for a company in this industry, and I think that was a absolutely huge catalyst in the first quarter and even the second quarter of this year. But right now, I think a lot of the hype has slowed down. And I don't think that's a bad thing whatsoever, because I am looking at this from a long-term point of view. So if the hype slowing down means that I get to buy in at $187 instead of $250, that's a very good thing for me. It means I get more shares. I would also like to point out the 5-year chart, okay? They had a very nice run from here, okay? The end of December till the 28th of September. Pretty much 3 years of 377%. They did very quickly go down, lose 50%, and they were in the red for a long time. They were in the red for the better part of nearly 2 years. So I love what I'm seeing with this company. They do have a history of, you know, exaggerated trends, let's say. So big upwards moves and big downwards moves for prolonged periods of time. Now, with that being said, we currently have a beta of 0.36, so it's not the most volatile stock in the whole wide world at all. And I mean, you can see that from when I showed you that 6-month chart in particular. Yeah, we have our moves up and down. We have big moves up and down, but 6 months down 2.6%. Not a lot's happening in the grand scheme. It all corrects itself. I think that's why a lot of people will get excited about this company right now, because we've seen a rather sharp dip. So what is one of the biggest reasons for this dips, and what do you definitely need to know if you're going to consider investing in this company, or if you're already an investor? Well, it's this. Shares were sliding on Wednesday after falling as much as 7.6% earlier in the day. The decline came after Business Insider reported that Amazon is building a telehealth services business that could compete against Teladoc. Now, I mean, Amazon does everything. Is this really a surprise whatsoever? Competition in business is very, very good. Show me one industry that only has one really well-performing company. You're not going to do it, and if you do, it's going to be a literal anomaly. There is always going to be competition, my friends, but there is also going to always be multiple winners. Amazon's a giant. I'm invested in Amazon as well. This is good news for us Amazon holders. I don't think it's bad news for Teladoc holders. So I don't want to get too far into this, but Amazon's essentially doing something similar to Teladoc. But again, it's Amazon. That's not a surprise. Anybody could have called this. Now, this news is coming from 5 people familiar with the matter who were not authorized to talk to the press. So we don't have actual confirmation from Amazon yet, but I would assume it to be true in all honesty. Back in November, they announced Amazon Pharmacy. But yeah, we don't even need to get too into this right now. What's important that this has ultimately led to a sell-off and maybe offering us a good buying opportunity. Now again, before we get into the Q3 earnings, there is this article right here I want to show you guys. Is Teladoc Stock a buy? Now obviously it's from the Motley Fool. It's written by one person. You shouldn't get all your information from one source, but we're getting it from numerous today. So we've already briefly touched on this, but patients are in need of much more flexible healthcare options amid the Roni pandemic. And that should be very obvious. So we've benefited from this, okay? But does that mean that, you know, when the Roni's gone, with these new vaccines coming out from Pfizer and Moderna, does that mean that we're going to start going down in value necessarily? Well guys, just keep in mind that this Q3 report that I showed you, the lockdowns were pretty much over for this business period, and we still saw the total visits going up absolutely massively. So I believe the simple answer to that question is no. I think this is a company who will still ultimately thrive even outside of Roni conditions. And they speak about that right here. The business continued to grow even after lockdowns ended, which is very important. So the number of virtual visits did continue to climb in Q3. And that was up slightly, about 2.9% from the second quarter. Well, keep in mind, during the second quarter, there was pretty much non-stop lockdowns. So the fact that it's gone up at all, to me, is absolutely huge. Now, one very, very important thing, okay? The merger with Livongo. will add diversification and create new opportunities. So this is another company I spoke about months and months ago on the channel. I didn't personally invest, but I know a lot of people did get in. So even if there is a dip in telehealth activity, as the economy gets back to normal and people aren't avoiding in-person visits to the doctor office, okay? Teladoc's business is much more robust and versatile today than it was at the start of the roaming. On October 30th, the company completed its merger with chronic care company Livongo. Together, the two companies can provide a much broader experience for patients that helps them with ad hoc injuries that may have with the one-off telehealth visit, while also providing them with ongoing, recurring care for chronic conditions such as diabetes. That's what Livongo will be primarily known for. There is only a 25% overlap in customers. The companies serve very different needs, and together they will be much stronger and much more versatile. So, sounds absolutely incredible, doesn't it? Well, look what happened. You see this big little dip that started all the way up here? This was pretty much because of this merger going through. So we have seen a nice recovery since then. Now Amazon comes out with the news there's a little bit of a dip. You can see pre-market we're up a little bit. But all in all, guys, over the last couple of quarters, they have shown us that they are a powerful company. And I think this was the perfect time for this to happen. So, while there may be fluctuations in the demand for telehealth in the future, and this is something I'm worried about over the shorter time span, over the next year or so maybe, I think ultimately a lot more people are going to turn to telehealth as opposed to traditional doctors, etc. But over the next year or so, I think it could be a little bit shaky. The need for managing chronic conditions will always be there, such as diabetes. That's not going away, my friends. That should add more stability to the new combined company. Now look at this. Is the stock a buy? A couple of interesting points here, a couple of non-bullish points. So if you're a growth investor, it's easy to be bullish on Teladoc. And I said this on the channel for so long now. It's so easy to be a bull. Like, it's incredibly easy. It's so easy to find some good things about literally any company in the world right now. If I wanted to be bullish on Hertz right now, I could be. There's potential here for the two companies to experience even more explosive growth by taking advantage of their respective strengths and varying customer bases. Okay, it makes a lot of sense. You would think that equals growth. The only question is whether the valuation is too rich. That's a question that nobody really likes having to ask when they find a company that they like. So the business isn't profitable. Adding another company into the mix could make turning a profit even more challenging. Teladoc Stock trades at a price to sales multiple of 18, okay? Very much so higher than the typical stock on the Healthcare Select SPDR fund, which they're paying 1.7 times revenue for. And in the past 3 months, the hype surrounding them has slowed down, okay? They're up 4%. The S&P 500 is up 10%. The only thing I have any concerns about right now with these guys is the price, is the valuation, is the premium I am paying. And I would have said the exact same thing 3-4 months ago when I was speaking about this company. But that does not necessarily mean I wouldn't invest in this company. When it comes to growth stocks, when it comes to companies with high potential, you're going to be paying premiums. So I would like to remind you guys that these are now the 6th biggest holding across all of ARG's ETFs, only behind Tesla, Roku, CRSP, Square and NVTA. One more very interesting thing I'd like to show you guys, okay? So this here is the amount of shares ARG own, and this is the price of the stock. Look at what's happened since it has started going down in value. ARG have absolutely, and I mean absolutely, been loading the boat on this stock, my friends. So maybe ARG thought similar. Maybe they thought it was a little too overvalued when it was up around 230, 240, even when it was approaching 250. But they still thought it was worth buying some. But now that it's coming down considerably, they may think it's worth buying a considerable amount. We'll put it that way. And why it's caught my interest, okay? You see I have this blue line written out here. Let's just say it's at $183 a share, okay? We bounced off it. If I bring you back, boom, where are we? The 4th of September, we bounced off it. Boom, the 11th and 12th of August, we bounced off it. And boom, all the way back at the end of June, we bounced off it. Now look, we did break through it here, okay? But still, this is a very, very clear line of support, my friends. I wouldn't say it's a floor by any means. I do most certainly believe there is potential for this stock to go lower. I most certainly do, in the short term at least. I'll move myself down for a second. You see I have resistance drawn out somewhere in the realms of, let's say, 235 to 240 or so. We bounced off there a couple of times as well again. We broke through it, but it did lead to a huge crash. Look, we touched off that resistance. We came all the way back down and tested that support. A couple more things from that Q3 report I want to go through quickly though. That net loss, okay? So it was 35.9 million compared to 20.3 million for the third quarter 2019. But excluding 16 million of transaction costs related to the pending Livongo merger, net loss was 19.9 million, and excluding 25.2 million of transaction costs related to the pending Livongo merger and the acquisition of InTouch Health, which closed on July 1st, net loss was actually 10.7 million. So if it wasn't for these acquisitions, it would have been looking a lot better. And that's fine, that's part of the game. Adjusted EBITDA was 39.5 million for the third quarter 2020, compared to positive 9 million for the third quarter 2019. That is incredible. Now, EBITDA itself was a loss of 6.8 million compared to a loss of 10.3 million. Still quite decent, my friends. Now, for the fourth quarter of 2020, what we expect. Total revenue to be in the range of 294 million to 304 million. So again, a small increase, a couple of % worth of growth, which is absolutely fine. I'd be very happy with that given the conditions. So EBITDA loss, excluding transaction costs, okay, to be in the range of 1 million to 2 million. That could be very nice. Adjusted EBITDA in the range of 21 to 24 million. Total US paid membership to be in the range of 50 to 51 million members. And visit fee only access to be available to 21 to 22 million individuals. But we do still expect to be at a net loss, which would put us for the full year 2020 total revenue to be over $1 billion, okay, which would be quite nice in my opinion. One more thing I'd like to show you, ownership breakdown. Look at this, my friends. Institutions own 55% of the company right now. You'll see a few big names there. You see Vanguard, General Catalyst, we see BlackRock, of course, then we see ARK Invest, Bank of America. But at the end of the day, 55% institutional ownership. That is large, my friends. Individual insiders are only 1.1%. The general public at 33%. Average volume of about 3.26 million, okay? And I think that is because there are so many institutions in here. This is an expensive stock. I mean, it's what, $187 right now, and it has that level of volume and such a low beta. Analyst recommendations: 3 holds, 6 buys, 4 strong buys. That is as of December, my friends. You will see an average price target from 26 analysts. This isn't like, you know, 1 or 2 people. Is at $243 a share, which still represents some nice growth over the next 12 months. So my friends, that was a little bit of a different company than we usually speak about. What exactly do I think? What am I planning on doing? I'm planning on opening an initial position. Now, mine's not made up on how much money I'm willing to put into these guys yet, but for me, somebody who's looking to diversify and somebody who loves growth, you know, this makes sense. It's a completely new industry to me. I don't have any money in there whatsoever. It's a company I really like. I do understand the short-term risks. I do think there is a potential that this company goes red for another 3 to 6 months in all honesty, but I think there's a bigger potential that even in that same time period, but more so over the next 1 to 3 years, they go up a whole lot more. Just because it's $187 a share, my friends, does not mean it's safe, okay? This still is a growth stock, and I do still think we're going to see some relatively big moves here. All you have to do is look at the 6-month chart. There is a lot, and I mean a lot of big swings here. And that is going to partially be due to the fact that there are so many institutional investors. But being so close to that line of support, after consolidating, after seeing that we broke down below it, if we have bounced back off this, and if we break 200, I think we're making a nice move back up to the upside. But anyway, my friends, that was my video on Teladoc. I hope that you enjoyed today's video. If you watched all the way until the end, you, my friend, are a true legend, and I really do appreciate you being here from the bottom of my heart. If you enjoyed the video, took some value, some insight, could I please ask you to hit that juicy like button, my friends? It really would mean a lot to me. If you could also drop me a comment down below and subscribe if you're new around here. They're both free to do, and they both help me out so much, and it would let me know that you guys want more videos covering different companies such as this one. And if you are interested in joining that private Discord group, where again, we speak about stocks all day, every day. There's over 600 members. You get my buy and sell alerts. Hit that first link in the description. If you want your 4 free stocks on Webull, if you want the easiest money of your entire life, you gotta hit the second link in the description. You gotta sign up to Webull, and you gotta deposit $100. That's all. 2 of those stocks are valued up to $3,700. It's the easiest money ever. Anyway, my friends, thank you so much for watching. I hope you have an absolutely fantastic day. I'll see you in another video very soon. Peace.